More Bad Euro Data by Bill Mitchell. As a brief follow-up to yesterday, German labor force data came out yesterday, Tuesday, and revealed that unemployment rose sharply in December, and the disgraceful barrier of a record 5 million unemployed is now highly likely in early 2005. In December, there were 4.48 million unemployed, or 10.8% of the active population. This is the highest level since 1990, and the second highest level in the whole period since World War II. While the federal government is intent on letting its neoliberal reforms take their course, the smart money is on a change of heart, as next year there are elections, and the German population will not tolerate unemployment above 5 million. Also, as a follow-up, the expected protests accompanying the introduction of the new unemployment benefits reforms were rather stifled. The BBC report, January 3, 2005, German benefit protests contained, said that, quote, German protests over unemployment benefit cuts have got off to a slow start, but 15 people have been arrested during scuffles with police in Berlin, end quote. Organizers had called for big demonstrations in more than 50 towns and cities, but by early afternoon only about 10 were affected. In Berlin, protesters tried to break through a police cordon around a job center, resulting in the arrests. Police said about 60 protesters had attacked them outside the job center in Berlin's Wedding district. Some demonstrators earlier forced their way into a job center in Leipzig, Eastern Germany, the AFP news agency reports. The reality is that there is only tepid growth in Germany, and businesses are using capacity adjustments to meet orders. Private consumption is flat, and most growth is coming from exports. In that context, the nonsensical stance of the ECB in refusing to deal with the overvalued euro is worsening the crisis. But amidst all the gloom, we can surely expect some sterling analysis from the employer groups. Bertrand Bertmois reports from the Financial Times today that Dieter Hund, chairman of the BDA Employer Association, rejected the suggestion on Tuesday, saying the latest statistics showed no sign of a labor market turnaround and merely underlined the need for broader structural reform, end quote. The employers were not happy with the extent of reform proposed under Hartz IV, which will undermine the living standards of the most disadvantaged workers in Germany. The plight of Germany is common throughout the Eurozone, but on the monetary policy front, things could not be more dissonant. There were hints on the Euro financial markets today that the ECB's obsession with inflation has no limits. On Tuesday, Eurostat's December flash inflation rate estimate came out at 2.3%, low A, slightly up on November's estimate of 2.2% annual. Well, not low enough when you compare it to the ECB's target rate of below, but close to 2%. Anyway, now the ECB is considering increasing rates above the 2%, which they have maintained for the past 18 months because they are still historically below their normal levels. The Financial Times reporter Ralph Atkins today wrote in his article, warning likely, as Eurozone inflation rises that, quote, last month, Jean-Claude Trichet, president, revealed the Governing Council had discussed raising rates. Economists said the central bank may have been encouraged by recent economic data that suggested consumer spending in France and Germany, the Eurozone's two biggest economies, might have recovered slightly. End quote. Slightly. Not if the German unemployment trend is anything to go by. Further, in the relentless quest for data, we note that the French Statistical Agency released its national count figures for the September 2004 quarter yesterday. The preliminary estimates had recorded a 0.1% rise, but now the final estimates record a growth rate of 0. 0 does not equal slightly positive. Conclusion. You may ask the logic of this. Various neoliberals who want us all to hark back to Wicksell claim that there is some natural real rate of interest that ensures stable long-term real output growth. This is the natural rate theory dressed up a little differently. It is the reason there is intolerably high unemployment. It should be culled from our knowledge base. As an economist, I lead a happy life. That is enough for today.